All right, ladies and gentlemen, I'm so happy to have you guys right here. The stage is filled. Everybody's waiting for the next sessions, and I hope you guys had a good lunch and ready for more for these afternoons. So, up next, the micro futures trading NASDAQ 100 and Dow Jones 30 as a retail traders. We will explore how retail traders can approach micro futures in major US indices, including the opportunities and risk involved. Please welcome Leithu Lushaba, market analyst from HFM. Please give him a big round of applause.
All right. Trading family. How's it going? How you guys doing today? You guys all look great, by the way. Thank you for coming through today, and I appreciate all the support from the people who have come. And my goal today is to educate you guys around how things go when it comes to NASDAQ and the Dow Jones. Anyone here trading these pairs? Can I see by a show of hands? So I know you guys are the crazy ones, eh? You know what they say, traders are crazy people. How can people volunteer to lose money? These people must be crazy, right? So my goal today is to share and give you some insight as to how can you navigate through understanding NASDAQ, understanding the Dow Jones, just to give you a bit of a better edge. Does that sound good? Let's go for it, guys. So the goal today is understanding micro futures, trading the NASDAQ, trading on the Dow Jones. The first thing we need to understand is what we'll be covering in this session. All right, I've got 20 minutes with you guys. I'm going to try to be clear. I'm going to try to be, as insightful as possible, okay? Number one, we'll be discussing opportunities in the index futures market, understanding the differences between NASDAQ and the Dow Jones, why micro futures matter, the difference or the understanding the advantages of retail traders in general, risk management framework, trading sessions, volatility, execution strategy, common retail mistakes, as well as building consistency and also the future of retail trading. That's what we'll be covering today. So let's start with understanding the difference between the Dow and the NASDAQ. We know that the Dow Jones is industrial-based US stocks, the top 30 stocks on Wall Street. We know that, right? We know that NASDAQ is based on tech stocks, top 100 technology stocks, mostly driven by companies that we know, Apple, Nvidia, Samsung. We know these companies. Now, we know that growth stocks or tech stocks always have an agenda to keep on growing in price. That's why Apple will keep on releasing Apple 17, Apple 18, Apple 20, right? These companies have a goal to increase what? Their share price. Are we together, guys? Same thing when we look at industrial companies like your Boeing, the airline industry, or even factories, different industries that affect the Dow Jones. These are not as fast-paced. Rather, these are stable economies. Are we together? It's all based on understanding how these companies work. That will determine the price action of the chart. Are we together, guys? All right, let's also have a look here. Why do micro futures matter? Let me tell you guys a quick story. When I started trading on the NASDAQ about 7 years ago, a trader needed to have anything between $500 to $1,000 to place a trade. But things have changed, right? Why is that? Because now contract sizes have allowed traders to get involved on CFDs, on futures, starting with lower capital amounts. That's a good thing for us as retail traders. But we also need to understand that, that gives us opportunities for better risk precision. It's all about risk, right? Traders, we love risk. But the thing is, we need to be able to manage our risk as effectively as possible, right? Let's also look at the different advantages. What are the advantages of being a retail trader, trading the NASDAQ, trading on the Dow? Well, we did discuss. The main one for me is this one, high volatility. Guys, if you are a trader, volatility is your friend, right? I know we complain about Donald Trump and some of the things that happen. We have something called Trumpnomics. When this man speaks, anything is possible, right? But we need to understand that without volatile markets, it is very difficult, especially if you are a short-term trader, to make any significant profits. The more volatile the market, the better for me and you. Are we together? Then let's also have a look here. NASDAQ. NASDAQ reacts through AI tech stocks. Right now, technology is the #1 growing industry in the world, guys. Just yesterday, in fact, just before I came up on stage, I took a look at NASDAQ prices. Current market prices are around 30,200. We hit new all-time highs yesterday, right? Yet we are still seeing all-time highs being created right now as we speak. Why? What is driving those prices? We've got AI development, we've got tech stocks rallying to all-time highs. It's never been a time like this in existence, guys. History is making its way into the technology industry on a daily basis. So understanding what affects different markets, that's the key to being a good trader, okay? Also, it is easy to access these markets through CFDs and through futures. CFD stands for contract for difference, right? We are trading the difference in price. So yes, you can own the asset. You can buy Microsoft shares, you can buy Tesla stock, you can. But when we trade NASDAQ, we have the opportunity to trade all these multitudes of companies and we can earn from the difference in price, right? That's the whole point of why we trade indices in the first place. Now, the market also reacts aggressively through geopolitical tensions, through different types of news events. When we talk about macroeconomics, we're talking about inflation, we're talking about interest rate data, we're talking about job data, right? These affect the NAS and the Dow Jones directly. So it gives us as traders a lot more opportunities to understand volatility. Are we together, guys? Remember what I said. If the market doesn't move, as traders, we make no money, right? So I know that non-farm payroll, CPI, PPI, I can expect movement from these markets because these are directly correlated with macroeconomics. Are we together? Trading family, also what we need to understand is how does risk management work? If you're going to be a NASDAQ trader, Dow Jones, risk management is the key. Why do I say so? Because Dow Jones can move anything between 3,000 to 5,000 pips in a single day, right? You guys know this. The NASDAQ can move anything between 500 points to 1,000 points daily. We've already moved 300 points for today alone, right? So it tells you that if we don't have any type of risk management framework, it's going to be very difficult to sustain our gains, right? Has anyone ever gone through a winning streak on either of these pairs, NASDAQ or gold or the Dow? But then one bad trade takes out your entire winning streak. Am I the only one that's guilty for that? Right? So we need to understand how things work. As traders, we can build an account for a week, for a month, for a year. But it only takes one bad trade to, take us back to square one, right? Risk management is the main thing. So I've basically constructed here a risk management framework for conservative traders. Conservative traders, you're looking to risk anything between 0.5, 1% on any given setup, right? Mainly also, you need to understand, walking into the trade, did you predetermine your risk? Do you know how much you're willing to lose? Do you know how much you're looking to gain from that position? Do you also know how you're going to manage the position if it goes in your direction? Do you know how to manage it if it goes against you? These are the questions we need to ask ourselves. Are we clear on that? Right? And me, I'm more of an aggressive style trader. Okay? I know I've got aggressive traders. Any aggressive traders here in the building? Right? Yeah, these are the guys who want to see large percentage gains. I'm also like that, but I understand that even though I'm an aggressive trader, I need to have strict rules. I've set strict rules for myself. One of them, for example, I take 1 to 2 trades a day. That's it. Right? It's a rule I've set for myself, and the reason I do that is because if I take too many trades, I tend to lose the idea of risk management. Are we together? Right? The less trades I take, the more precise I can be as a trader. That's my goal, precision. It's not about taking many positions, but it's about quality over quantity, right? As an aggressive trader, you're looking to risk anything between 1 to 3% of your account on any given trade, obviously depending on the type of equity that you trade. I always target anything between 1 to 2, 1 to 3 risk reward. It's a good enough for me, right? every trader needs to define what is it that's going to make you happy as a trader. You know what your daily target is. You know what you need to do as a trader, but you set the rules. No trader here can set the rules for you. But the question is, do you stick to the rules? Right? The rules exist to protect us as traders, but we tend not to stick to the rules, sometimes because of trading psychology, right? Is there anyone here who can say they have left their risk management because they got into a bad trade, psychology put them, in a bad situation? It happens sometimes, okay? But we always need to go back to the framework. So set your own framework as a trader. This is mine, and maybe it can assist you to set your own as well. Let's also have a look at trading sessions, okay? My brother Bruce Chaka always says, a trader makes money when they trade at the appointed time. But we don't study time as traders. We always look at the price. But the key to understanding time is to know when the market moves. Are we together, guys? Right? We've got 3 main times in the market. We've got the Asian session, we've got the London session, we've got the New York session. My 2 favorite times is the New York session as well as the London and New York overlapping session. For me, that's the time. That's my appointed time when I find the best setups on the NASDAQ. Are we together? Right? Now, the reason why we know that New York Open begins at 3:30 South African time, we're going to see volume at that time. We're going to see a lot of impulse coming in at that time. Breakout candles, retest, continuation to a specific direction. And that's what we need. As traders, we are always looking to understand the market sentiment. Without sentiment, we have no type of understanding. Where's the market going? Your job is not to guess. It's to trade at the appointed time. Are you guys with me? All right, let's also have a look here. What's happening on the Dow Jones and the NASDAQ. This is the most important slide of this presentation. Understanding the difference between a profit-taking retracement, understanding the difference between a major retracement, and the difference between a market crash. These are 3 different things, guys. And most traders do not understand the difference. So, would you guys like to know? Can I tell you? Right? Let's look at it. When we have profit taking in the market can correct anything between 5 to 10%. Okay? A lot of people would think, okay, the market's beginning to crash. However, this is just a correction. Usually, we will see all-time highs being broken after these types of retracements. They don't last so long, maybe a couple hours, a couple days to a couple of weeks. Okay? And it usually happens because of institutional profit taking. When people see, like for example, right now, NASDAQ is at 30,200. What do we expect? As traders, we expect that NASDAQ will start coming down, yes? Of course. And it will come down, guys. Everything that goes up will come down. But we need to understand there are different types of markets. The market is still bullish, even if we see a 5 to 10% retracement. We can practice what we call buying the dip, right? Because we know after a retracement, we're going to get continuation, yes? However, we also have major retracements. What triggers a major retracement? Major retracements are usually triggered by economic data or geopolitical tensions. Are you guys with me? If we do see bad NFP numbers, CPI numbers, interest rate data that is against the narrative of NASDAQ or the Dow, we will see a major retracement, guys. A major retracement, anything between 10 to 20%. What do we do in this environment? Now it's time for us to be patient and manage our risk. It's not the time to be risk aggressive, but rather to wait for the market to correct itself. Let's look at history, guys. I started trading the NASDAQ. The prices were at 6,000, 2018. Today, NASDAQ prices are at 30,000, 2026, right? How many times did people tell me, no, it's too high, it has to go down? I can't tell you how many times. A lot of people thought that COVID would cause a major market crash, yes? the whole market would crash. But what happened? Yes, we did see a major retracement. In fact, we can call a situation like COVID a clear market crash because the market went down for approximately 3 to 4 months. However, what did the market do after that? We found a correction. So the market moves in what I call a cycle. There are 3 different cycles. There is a bullish cycle, there is a range, there is a bearish cycle. The market knows nothing else, right? We just need to identify which cycle is the market in. I'd say currently the NASDAQ and the Dow are clearly in a bullish cycle, meaning we look for the retracements when the market makes a higher low, we look to buy as technical traders, right? But we also need to understand the sentiment. What can cause a market crash is anything like a recession, anything like a black swan event, another COVID-19 event could cause a potential market crash. A market crash is anything above 20%. If the market retraces more than 20%, we now say we are in a bear market. We're together, guys, right? Know when sentiments change. Understand also that when this happens, this is the time to protect your capital. If you're not protecting your capital in this time, usually buyers will be wiped out of the trade, and what? The market will find a recovery and go all the way back to the upside because you didn't protect your capital. It's so important to understand how these charts behave, okay? There's something that we always say in my community. We say, bulls make money, bears make money, but pigs get slaughtered, right? What does that mean? It means that you can make money as a buyer. You can make money as a seller. But the one thing you need to conquer is greed. We all have to conquer that, right? And no matter which level you are as a trader, we deal with these emotions. Yes or no, guys? Right? So it is important we understand the environment that we are in, number one. Number two, we need to know when the sentiment changes, how do we adjust to the market? Remember, as traders, we don't know what the market is going to do. The market tells us. The market is the boss, yes? All we do is adjust. That's all we do, guys. We don't guess prices. We don't try to anticipate where it's going because let's be honest, guys, nobody really knows where it's going. No matter what level of education you have, there's always a sense of being a speculator. We are all speculators. So understand, risk management is the only thing that will answer your problems. Now, let's look at common mistakes. What mistakes do traders make? I've made some of these mistakes myself. I'm guilty. That's why I'm giving it to you guys. Maybe you can avoid some of these mistakes. Number one, of course, over-leveraging on your account. It's a major mistake, guys. Even if the direction is correct, sometimes we lose an understanding of risk because the more we over-leverage, the more we can't survive the trade, right? Let's also look at ignoring major news. You know, I love those traders that say, no, I don't follow fundamentals. Technicals must comply. The fundamentals will follow the technicals. Hey guys, even me, I was like that at some point. Until this gentleman named Donald Trump came to play. And I understood that actually fundamentals are extremely important. Pay attention to what moves the market, guys. Okay? Another major mistake is confusing pullbacks with market crashes. Guys, these are not the same thing. A pullback means we're going to see a short-term bias on sellers and a long-term bias on buyers. But a market crash means now the market is impulsing in the wrong direction, or let me say in a bearish direction. We know that for the stock market, we always want to see new highs, new highs, new highs. But you do need to understand the difference between what I explained in the previous slide. A profit-taking retracement, a major retracement, and a market crash. It will assist you a lot, guys, to be able to be more accurate. Now, also, another mistake I see traders make is fighting the overall trend. You know that old saying, guys. Every trader knows it. The trend is your friend. Follow the trend because that will probably make you more money. Okay? I'm not saying you can't go against the trend. Understand how the sentiment works. If you're going against the trend, do your best to manage the position. Are we together, guys? All right? Now, also, let's look at, I'm not too sure what's happening there. What do smart traders do? Right? We know the mistakes traders make, but let's look at the opposite. What do smart traders do? Number one, they practice a strict risk management profile. They understand that long-term success doesn't come from one good trade, guys. It comes from a series of trades. It's not one trade that will fix your problem, right? It's a multitude of good trades. So if you don't have a risk management model, chances are, no matter how many good trades you have, it only takes one bad trade to change the story, right? Now, also, having patience and discipline. Patience and discipline. A lot of people, they don't wait for the appointed time, right? They know where the market's going. They do the analysis, but they lose what? They lose patience. They get involved too early, or they don't practice what they preach. I know I've done that. I've had a plan and I didn't follow the plan, and guess what? The market punished me every single time, right? So when I follow the plan, I see results. Also, trading during a high volume session. New York session has the most volatility. Most smart traders focus on this session, okay? Also, follow macro news. Understand that your goal as a trader is to protect your capital. I know we want capital gains, guys. Every single one of us want capital gains, right? But we have to protect our capital first. You know why? Without our capital, can we play in this game, guys? Can we play this game? We need to protect our capital to play this game. So consistency has to override your emotions. I always tell traders, don't rush the process, trust the process. Because when you rush the process, you don't give yourself a chance. When you trust the process, you believe, you understand. If I follow the rules will eventually pay me. Are we together, guys? All right. Let's talk about building consistency, a consistency model. As a trader, we all want to be disciplined, yes? We all want consistency. But the truth is, you have to inspect what you expect. Discipline and understanding the market, it's not an overnight thing. I would say focus on one strategy, guys. One strategy. It's what you need to do. Hopping from different strategy to different strategy, it's only going to cause you more confusion, right? Stick to one thing and master it. Also, trade high volume sessions, okay? The more consistent you are, in fact, I've got traders in my community that are spending only 30 minutes a day on a chart, only an hour a day. But what? They are consistent. If you can do it day in and day out, that is where you'll see yourself compounding gains. Let's also look at trading with the trend and not your emotions. You know, people who trade with emotions, you know what they'll tell you? It must go down now. The market doesn't have to do anything. In fact, the market will do what it wants to do. We don't control it. The only thing we control is how we analyze and how we manage our risk. Are we together, guys? Okay? Also, focus on probabilities. This is a game of probabilities, not perfection, right? There's a famous line that I believe Drake says. He says, we win some, we lose some, as long as the outcome is income, right? The goal is to come out with a profit, but we cannot win every single trade, guys. It's actually impossible. I'm here to tell you guys the truth. If you're a trader, you're going to lose some money, guys. You need to be comfortable with the idea of managing your risk. Because the question isn't whether you're going to lose or not. Definitely, it's going to happen. How do you manage? Management is the answer, right? How do you manage emotions? How do you manage yourself when you're in a good trade? How do you manage yourself when you're in a bad trade? Are we together? All right? This is how we're going to form our consistency formula. I've got a formula here for you guys. Consistency formula is discipline plus patience plus risk management plus repetition equals long-term profitability. Did you guys get that? Right? You wrote it down, right? It's not about high risk. Yes, we can have moments where we can increase our risk. But long-term, we need to understand that if we can just see compound gains, as a trader, you've done your job, right? So, What is the future of retail trading when it comes to the NASDAQ, when it comes to the Dow? Let's have a look here. Number one thing that is driving markets right now is this thing. We call it technology and AI. It is driving markets, guys. The future belongs to technology. We as traders, we also need to learn how to utilize technology as effectively as possible. Okay? We know that AI has come to the job market and is affecting a lot of people in the industries that we work in. But here as a trader, I think AI works to our advantage in some ways. Okay? Now, the NASDAQ and the Dow will continue to dominate in volatility. In fact, right now, the Dow and the NASDAQ are the #1 moving indices that we have worldwide. So you are now involved in a market that is very liquid, guys. And with that comes a lot of responsibility. You know what they say, heavy is the head that wears the crown, right? So if you've got access to moving markets where you can make and lose on a daily basis significant amounts, what really matters is what's going on here. The mindset, right? The key to your success is in your daily routine. That's the key. If you want the answers, look into your daily routine. It will tell you everything you need to know. Now, also, I believe automation will become more relevant in the next coming years. Traders are always looking for ways to automate, right? I know. When it comes to capital gains, if we can just put on a bot and let it do something for us. But here's the truth. We will need to still understand different market environments. In order for these AI developments to be effective, it needs to know the different conditions that the market moves. So our time is coming to an end. Trading family, it has been a privilege. Also, the last main thing I want to give to you guys is your future success as a trader will depend on how you adapt, number one. How do you adapt to the market conditions, to technology? Number one. Number two, how do you manage your risk? Are you managing your risk as a professional, or are you managing your risk as an amateur, right? To become a professional, you need to understand what is your long-term plan, stick to your risk management rules. Number three, trade with discipline, right? Like I told you, 2 trades a day for me. Why do I do that? It's all about discipline. Understanding that it's not one trade that's going to answer all my problems. It's a multitude of good trades, okay? And lastly, focus on consistency, not gambling. Gambling does not help us. No matter how many times I've gambled in the market has always found a way to punish me. But every time I've come to the market with a clear plan, I seem to understand how to compound my gains. That's my value for you guys today. Trading family, thank you so much. It has been a privilege. It's your boy Maestro. You guys know the story. We are here at FMAS 2026. We're about to do another session there at the HFM booth. It has been a blessing. Please, guys, take the information and use it. It's only valuable if you use it, right? I'll be here to answer some questions there at the back. Thank you, guys. Take care of yourselves. God bless.